Welcome to Academic Gain Tutorials. In this video, we will look into the differences between bank overdraft and bank loan. A bank overdraft is a credit facility where the current bank account holder is eligible to withdraw excess money over the amount present in their current bank account. It can be viewed as a short-term loan where the holder of a current bank account is entitled to take out excess money in case there is a need for it. On the other hand, a bank loan is defined as borrowed capital that any financial institution decided to lend to either an individual or an organization. This amount is lent for a specific purpose and has to be repaid over a period of time. It is important to note that a bank loan is a long-term liability for the institution. So, let's look into the basic differences between bank overdraft and bank loan in a tabular form. Difference number 1. A bank overdraft is a credit facility allowing withdrawal of excess money from a current account, whereas a bank loan is borrowed capital lent for a specific purpose to be repaid over time. Number 2. The bank overdraft facility is applicable for current account holders to finance daily business operations and cover emergency expenses, whereas the bank loan facility is used to facilitate capital purchases, business setup, or upgrades. Number 3. No security or collateral is required for a bank overdraft, and it must have a current account with the bank, whereas a bank loan requires security or collateral acceptable to the bank without the need for a current account. Number 4. Repayment for a bank overdraft is flexible based on when funds are available and typically has higher interest rates, whereas bank loan repayment is made through regular monthly installments based on a predetermined formula. Number 5. The bank overdraft facility is for short-term borrowing, typically from a few days to 6 months, whereas bank loans have long-term borrowing periods with repayment durations up to 20 years. Number 6. It is necessary to hold a bank account to avail of the overdraft facility, whereas it is not necessary to hold a bank account to avail of a loan. Number 7. Bank overdrafts offer more flexibility in terms of withdrawal and repayment, whereas bank loans follow a fixed repayment schedule and are less flexible. Number 8. Interest rates for bank overdrafts are generally higher compared to bank loans, whereas interest rates for bank loans are generally lower compared to overdrafts. Number 9. Bank overdrafts are primarily used by businesses for working capital and short-term needs, whereas bank loans are used by both individuals and businesses for various long-term purposes. And finally, difference number 10. Bank overdrafts generate high revenue for banks through frequent usage and higher interest rates, whereas bank loans generate revenue through longer repayment periods and larger amounts. So, these are the differences between bank overdraft and bank loan. If this lecture was helpful, give it a thumbs up and subscribe to the channel. Thank you.